This is Eric Hess with the Encrypted Economy. On today's show, we have two guests from Atomyze. Now, that's a first for the Encrypted Economy. We have Jeanine Hightower, who's its CEO, and Corey Wendling, who's Atomyze's CTO. Now, Atomyze is preparing to tackle the purchase and sales of physical commodities as well as their supply chains through the use of blockchain technologies. Now, I'm going to give a little bit more background on one of the things we talked about in this episode. See, Atomyze uses Hyperledger Fabric, which is a private blockchain. For those who are unfamiliar with it, it may be because there's no token to trade for. It's not like Ethereum, which is a public blockchain. It was founded in 2016 by the Linux Foundations and is an open source collaborative effort focused on advancing cross-industry blockchain technologies. Its membership list is impressive. It includes Intel, IBM, Microsoft, Baidu, American Express, JP Morgan, DTCC, Accenture, Verizon, Walmart, FedEx, Tencent, SAP, Consensus, and a whole lot more. So their choice of this technology says a lot about their approach to their technology backbone in general. So with that, reach out to the Encrypted Economy or me on Twitter with your thoughts on this episode or any episode. Rate my podcast, share it with others, share it with the community. Thanks so much. And with that, I bring you today's episode with Jeanine Hightower and Corey Wendling of Atomyze.
Welcome to the Encrypted Economy, where we look at the business of, regulation, and security for all things encrypted, digital assets, blockchain technology, privacy, and smart contracts. Hope you'll join us while we explore these forces that are shaping the economy. So this is Eric Hess with the Encrypted Economy. Today, really excited to have Jeanine Hightower and Corey Wendling from Atomyze on the show. I will let them introduce themselves, but Atomyze is a pretty exciting platform, a way of tokenizing precious metals and other trace elements and creating a market for them in a way that sort of improves upon the existing infrastructure that we have today. So Jeanine, Corey, welcome.
Thank you.
Thank you.
So, Jeanine, why not give us a little bit of a background on yourself and how you came to Atomyze and what you're trying to accomplish there? You can go through each of. I'll ask you if you can break that up too.
Okay, I'll let you ask the questions. How about that? So thanks for having me on the show today. As you mentioned, I'm the CEO of Atomyze. We're a Greenwich, Connecticut-based startup focused on tokenization. But prior to my time at Atomyze, I've spent a long career in financial markets, almost 20 plus years at this point, in always seemingly startups in the FinTech space. I've had a traditional career in finance and non-traditional as well. Most recently, I was the managing director of operations at Gemini, which is a cryptocurrency exchange and custodian. There I managed the digital asset exchange as well as built out the cold storage custody business. And prior to my time at Gemini, I was the chief operating officer at a NASDAQ subsidiary known as the International Securities Exchange, which is where Eric and I know each other from. The ISE was a FinTech startup back in the early 2000s that brought really a revolution to the U.S. equity options markets, bringing fully electronic trading to those assets and all of the subsequent market structure changes that came on as a result of electronification of those markets. And then prior to my time, my 14 years at the International Securities Exchange, I had worked in the late 90s in investment banking in the internet sector, when the internet was its own sector at the time. So it's really covered the gamut of new tech over the last 20-something years.
It's weird for me to think of the ISE as a startup from where I got involved, but I guess it was at one time, right?
Absolutely, very startup at the beginning.
Yeah, and so tell us a little bit about how Atomyze, where it came from, what was the germination of it, and how you kind of brought it to reality.
Sure. So Atomyze has been founded by a set of backers that come from mainly the metals and mining space. And the concept is pretty simple in its essence, but looking at that industry, looking how metal contracts in terms of supply chain contracts work today, looking at how some metals trade, in terms of some of the legacy systems and market structures that exist, there's a huge room for improvement in terms of that marketplace today. And there is an awareness of new technology that can happen to transform that industry, as what we're talking about is blockchain, of course. And the combination of the two is a very powerful combination because it has the opportunity to really leapfrog that entire industry forward. So at Atomyze, we're existing in a corner of the world that's focused on tokenization. And what we're aiming to do is tokenize assets that exist, meaning bringing the ownership of those assets into digital form. Efficiency, of course, because when something becomes digital, the ownership and the transferability of it becomes very efficient in terms of its ability to exchange or trade or buy or sell on a platform. So at Atomyze, we're building a platform for tokenization of assets, as well as a marketplace for investors, market makers, producers, commercial users to both buy and sell contracts on the platform. So that's kind of the world that we're existing in terms of trying to bring efficiency and modernize the markets for metals. And then ultimately, our goal is really to extend beyond metals. Really, you could parlay what we're doing in tokenization to any type of real asset, whether it's a hard commodity, soft commodity, or even intellectual property. Being able to identify, structure a product so it meets certain regulatory definitions, and then create efficiency in the transferability of the ownership of those assets is really the essence of tokenization. So that is really what we're aiming to do at Atomyze.
Excellent. And Corey, how about introducing yourself and giving us a little bit about your background?
Yeah, absolutely. I've been really lucky in my career, working across a broad range of environments, across many technical stacks and industries, and mostly on the cutting edge side of things. I actually started my career programming low-level embedded systems in C for the military, real-time OS, multi-threaded operating systems. Like I said, really low level, required precise timing, guaranteed maximum time of execution, a lot of thread prioritization, semaphore passing, avoiding race conditions, those kinds of things. From there, I went on to doing Java development. I still remember Java 1.0 and kind of thinking how Java was going to be big someday. I still have somewhere my Java report magazines and all the early articles and things that used to come out about Java. Went to work for a gaming company started by the founders of Activision. Where I was doing Java applets and server-side CGI scripting. Managed to overload the Java 2 virtual machine because back then it just wasn't as robust as it is today. From there, I went to Verizon Wireless, spent many years rolling out various data services. My first project was mobile-originated SMS. You couldn't even send a mobile-originated text message from your phone. Went on to launch picture messaging, mobile web, ringback tones, VCAS video, VCAS music, 3G, 4G, all the data services. I started off doing operations, sleeping with a pager, moved on to engineering and doing capacity planning, upgrades in architecture, and then moved into planning where we were doing budgets and kind of multi-year plans. Building systems using load balancers, server farms, virtual machines, things that later would be known as cloud, we were doing long before kind of cloud existed. I remember going to an early Amazon summit and seeing cloud, and it was those exact things, load balancers and server farms, which we had been doing for quite a while. The systems that I was responsible for generated $1 billion in revenue and served 100 million subscribers. So going from very low level to big architectures and serving lots of customers. After that, I went to work at a few startups in the ad tech space. Really focused on kind of digital engagement with physical assets, using QR codes, NFC, Bluetooth beacons, those kinds of things, so we could engage with physical objects. And then went to work for an interactive touchscreen company, which was doing wayfinding and targeted advertising with face detection, which are just now starting to come out in malls. And then after that, I went at Paxos, which is, I think, probably the most relevant to where we are. I was the head of engineering at Paxos. We provided a custody platform, a cryptocurrency exchange, multiple digital tokens and settlement products. It was a really busy time. We launched more products in 2019 than in the previous 6 years of the company. During my time there, we got our no action letter from the SEC for security settlement. Rebuilt and consolidated our platforms, launched BUSD, HUSD, added confirmations and affirmations tools for commodities, launched Pax Gold, and started the PayPal partnership. We custody currency-backed tokens and gold-backed tokens. One of the products we launched during my time there was Pax Gold, which is an asset-backed token backed by physical gold kept in Brink's vaults. But really, Pax Gold just kind of scratched the surface of what we can do with tokenization of commodities and other physical assets, which is really why I'm at Atomyze today.
Excellent. Wow, that's a history. So you've been in the workplace for what, like 2 or 3 years, right? No, just early stage.
I'm a newbie.
He's a newbie. This all happened. He was week to week there, accelerated. So, well,
learning,
great.
By the way.
Welcome to both of you, of course. So this is a very intriguing marketplace, and you're really blazing the trail with this. Even though you had Paxos Gold, you're taking it to a whole new level. What are some of the challenges that you're seeing just right out the gate in terms of the adoption of this?
So I think for us, we're preparing ourselves for launch in fall of this year. And I don't know that we're seeing challenges in the sense of adoption at this point. What we're really focused on is being able to open up these markets for a new class of investors. And I think that's probably the biggest challenge. We're bringing forth a new platform, of course, which has its own challenges in terms of customers accepting, adopting a new platform, a new style of investing. And then also we're looking to bring forth new assets themselves that haven't really been available for customers to invest in to date. Not only will we look to bring silver and gold, as Corey mentioned, Paxos Gold's already in existence, but we're really focused on trying to bring new assets that don't really have any investment opportunity for not just the public, but even for investment managers and funds to invest in today that are really complex and difficult for people to be investing in. So I think that's where our sweet spot will be and where the biggest challenges lie. For us, in terms of structuring, and I'll let Corey, of course, comment on all the technical challenges and the build that's in progress. But on the business side and the regulatory side, for us, the biggest challenge is structuring, how to make sure that the investment opportunity is attractive to investors. And there's a couple of things that are important here. One is the regulatory guidance for the products and how they're going to operate. So for us, establishing all of our regulatory licenses, that includes obtaining a trust company license to make sure that the oversight that customers would expect from a platform like ours are there. It involves the structuring the products themselves, so it fits a definition that they can work with, so that it can be as familiar as possible when they're looking to invest in these assets. So for example, the initial product we're going to market with is a Palladium token. Palladium is relatively hard to access from an investment perspective, especially for small to medium-sized asset managers. So being able to offer direct ownership of Palladium in form of a token is pretty exciting to the marketplace. It's something that they're not buying into an ETF, they're not buying a future, they're not buying into a pool, they're actually buying a very specific piece of Palladium sitting in a tier 1 vault. And that's a really interesting opportunity for investors. And they don't need to do it in increments of $100 million or $500 million to make it possible. They can actually invest in smaller size investment portions. So if they needed to buy an ounce or a bar, they can do that. But what comes along with that is making sure that the products themselves can fit regulatory definitions, in this case, a spot commodity definition, so that the customer is actually buying a specific piece of identifiable metal. The customer can actually redeem that token for the metal. So it has all the hallmarks and all of the features of actually buying the physical metal, but it exists in the super efficient form of a digital title.
Excellent. And so for traders of these commodities today, they're buying it as part of pools. They don't know, they just have a general knowledge that it's a part of pool. For a professional investor, what does that additional certitude give them?
So for one, they're not a creditor, right? They're actually buying a very specific piece of metal in a vault. So they're not relying on the pool owner to manage the pool. They're not becoming a creditor of a bank that's maybe holding the assets on their behalf. They're not buying a future, which has its own risks, as well as certain expenses related to rolling those positions. They're not buying into an ETF structure that has, another vehicle on top of it that has added costs in terms of the ownership and the structuring of it. They're actually buying the metal. Same as if you were going down the street to your local, gold dealer in town and walking out with a bunch of gold coins. You're actually buying the actual metal. And so the assurance that you own it, that you can redeem it is pretty important. But unlike actually buying the physical, you don't have to manage the storage on your own. You don't need to manage the logistics, the insurance. You don't need to get a broker to go buy it. on one of the exchanges. And ultimately, with an efficient product, there can be a 24/7 marketplace available for trading it. So you're really not constrained to current market hours or the twice-a-day auction environment that exists today for many of the metals that will be tokenizing. There can actually be what we would say a more efficient price discovery process for the metals themselves.
Excellent. And I suppose that it also reduces any risk of that asset being used as collateral for other things. I mean, you have the certitude. I mean, certainly one of the problems that we've had, at least in the mortgage market, is you had multiple claims on the same mortgage, right? And that led to a painful unwind. But in this case, you don't have to worry about that. You cover copper too, right? Copper is part of it?
Yeah, so we'll be tokenizing. Palladium's the first product, but we'll be adding other metals, and gold and silver we mentioned, of course, but copper, nickel, cobalt, and a host of other metals that we think there'll be interest in from not just even a tokenization perspective, but even just access to some of these metals that are pretty hard to access today. And they are, metals that are needed and part of the growing economy. So we do think that investors will have a lot of interest in finding a way to actually acquire some ownership participation in these metals. So there's the platform aspects in terms of making it more efficient, reducing the cost of ownership, but also the opportunity to even be able to access some of these metals that there have been pretty high barriers to entry to date.
Right. And I only raise copper because it is such the topic of conversations these days, and everybody's trying to get copper exposure, it seems. And so being able to say, no, this is what you own. You don't have to worry about too many people owning the same thing and not being able to get it out, right?
And you're right, and that is one of the aspects of blockchain, as we know, of course, is that there is no credit risk or really performance risk because the metal exists. So for the process for tokenization, the metal itself is actually in a vault that is controlled by Atomyze. There's a third-party auditor that comes in and on a monthly basis will inspect the metal and make sure that the bar count matches what the blockchain record is providing so that the investors can be assured that it exists. It's the model for stable coins. You can think of these tokens as being really metal-backed stable coins in some way. So that assurance is really important for the aspects of the product that investors need. But again, since they're sitting in the vault, if you need to buy or sell, you can actually do that without having to actually physically move the metal from cage to cage or vault to vault. It becomes a very efficient way to transfer the ownership without having to actually transfer the physical.
Yeah, and kudos for dealing with the proof of reserve issue up front, right?
It's really important. We talk a lot about, the nifty marketplace, and there's a lot of interest in collectibles. And and we say here, there's a big difference between, buying something for $50 and, hoping you get, the rights to it or the ownership of it versus, buying investment grade products where people are investing a significant amount of their dollars. There has to be the proof of ownership and the proof of authenticity associated with it to make the product itself viable. And so that's something that's from the get-go is a non-starter for us to have.
Right. And you don't have the risk of your ownership being tied to a 404 error for a NFT. So in terms of the technologies, Corey, what are some of the challenges that you face in sort of creating this market? I mean, you had the benefit of kind of going through it once, but it's certainly not an easy task, and want to shed some light on that process.
Sure. I would say that there's a few things that we're working through. One is as we talked about, we're doing a number of different assets that we need to tokenize. We wanted flexibility in the kind of smart contract we're creating and what we want to do around these tokens. And so in doing smart contracts, because it's code, we have the flexibility to decide what parameters and what methods or functions we want to make available to these tokens. So that's one of the things I'm really excited about. The other thing is because we're using Hyperledger Fabric, which is based on multiple blockchains, which are called channels, we have the flexibility to create customized policies around these tokens, and therefore have more control over the privacy and availability of who can see what transactions are taking place, even at the point of validators. So we're building a network of validators who will basically be running nodes on the network and can validate things, but there's still a concern, I think, for some of our customers on kind of who can see some of these transactions. And so the ability and the flexibility of the platform to be able to deal with that, I think is another advantage of what we're building here.
Oh, okay. Who would be a natural validator?
Excellent question. So there's a few natural validators. One is kind of companies that are doing attestation, ones that are already kind of involved in the network and have visibility into it. I think there's opportunities for multiple either financial institutions or other companies or partners that we're working with to participate in that. It's really about building an ecosystem, right? It's about building an ecosystem of trust and permissioning and making sure that, like I said, that there's privacy and kind of that we're running things in a secure way, right?
And what's the base layer? Is it Ethereum based?
No, it's based on Hyperledger Fabric. So
Hyperledger Fabric. My bad.
Yeah, no worries. Hyperledger Fabric is what we're using. There's actually a number of reasons why we did this. Like I said, one is based on kind of privacy and permissioning and being able to kind of, we have kind of regulatory requirements around KYC and KYB and some of these kinds of things, know your customer, know your business, anti-money laundering and things like that. So being able to provide it on a network that's able to do those kinds of services is important. As well as another thing that's going on right now is, if you're familiar with kind of the performance challenges of some of the public blockchains, Ethereum is going through kind of a 2.0 right now, which is a multi-year project to try and get additional transactions, but our platform can already well exceed the transaction throughput of what Ethereum can handle. And so that's kind of another advantage of using Hyperledger Fabric over going with kind of a more public blockchain.
Excellent.
And I'll piggyback on Corey's comments, just because they shouldn't be understated, that for the platform itself, because it's private and permissioned, everybody has to go through a KYC check. There is sort of no unknown entities on the platform, and no entities that haven't been permissioned by Atomyze, including validators. And so for us, it's really secure. And again, as we're thinking about the institutional marketplace, wealth managers, asset managers, we know that they want to be on a network where there aren't bad actors and that everybody is meeting the regulatory standards. And so for us, it's a really important aspect of the platform, especially as we go through our licensing process, to be able to demonstrate that it is a fully regulated, fully compliant platform, and that there's no unknown actors on the platform.
Right. Excellent. So shifting a bit to smart contracts, what are some of the most compelling use cases for smart contracts for your target?
Sure. So there's a few different use cases we're working with on smart contracts. One is as we talked about, kind of the asset-backed tokens, being able to make tokens available to our customers based on the physical materials that are stored in the vault. Another one is kind of the industrial token, which is a smart contract or a kind of a contract that if someone's wishing to receive a delivery of palladium, maybe on a monthly basis, a 3-month contract, and they don't need a shipment or something is coming that is not needed, the ability for the platform to be able to make those contracts or those kind of monthly deliveries available to someone else. So the ability to tokenize kind of parts of contracts and make those available for delivery, I think, is another kind of advantage of what we're building here.
Excellent. And also on your website, I think you cover transitioning of long-dated contracts to tokenized individual deliveries.
Yeah, I was going to pick up on that for a moment. So Corey was mentioning, one aspect of the platform, which is not only tokenizing, metal above ground, fabricated metal in bar form or in refined form in a vault or a warehouse, but also actually tokenizing the individual contracts that exist in the commercial side of the business. This is, as you can imagine, a very paper-based manual process, and by paper I include PDFs because they're being shuttled back and forth between miners, between producers, between commercial users, and sort of all the processes that exist in between, what we would call toll processing, along the way as the metal or the material transforms from one to another. And so we're also focused on tokenizing those contracts. So as Corey mentioned, really simple example from the last year is if you're a consumer of palladium and you're using palladium in your catalytic converters for auto manufacturing and you're acquiring this on a set schedule over the life of a 36-month or a longer contract, if your factory closes in the summer of 2020 because COVID's hit, you clearly don't need all the palladium you've been contracted to buy. But unfortunately, those contracts are really fixed. They're take or pay. you either take the material and you pay for it, or you don't take it, you still pay for it. But even if you take it and you're paying for it, you still have to warehouse it, store it, ship it. And rather than take it and try to resell it yourself, you could actually take the deliverable in token form and either, work that back with your producer, or ultimately have that as a market-based platform where someone else, either another commercial user, or even in a developing marketplace where assets become efficient, they become electronic, they become efficient, there could even be middlemen that are willing to own a delivery for a period of time in order to resell it at a future point, in terms of speculating on where those might go. So we intend to also start tokenizing the supply chain contracts for these metals as well, which I think is really innovative and will be a huge benefit for the industry. Obviously very complicated, but is something that we're particularly focused on.
Right. I mean, it certainly would minimize the risk of, certainly there's a risk when you take the deliveries that something could happen and you may not be in a position to do it, and finding another buyer who needs it at that time would certainly be a big benefit. And
there's really interesting things in that side of the world too. ESG, so sourcing, environmental issues, governance, labor practices are all features of a physical good that make it, unique and differentiated. But in terms of the physical is really fungible, but the aspects of creating that physical have attributes or features that are really unique to that product. And one of the things that blockchain is particularly suited for is being able to track and add to a particular shipment or a particular token the features that come along with it. So as a token is bought and sold in the marketplace, it can retain the aspects of where a particular material was sourced from, or the methods in which it was refined, or the labor practices from the mine in which it originated. And that's actually one of the benefits that we think will evolve for these products, but are a really attractive part of the smart contract as we build this feature set.
Excellent. And for tracking too, obviously, right, throughout the life cycle. So in terms of integrating the custody into this product, what were the challenges that you faced, Corey, and how'd you get through them?
Sure. I guess first of all, custody has seen, I think, a lot of activity lately, increased interest in kind of growing assets under custody. There's been a lot of kind of acquisitions and investments taking place lately with, Curve was acquired by PayPal, BitGo was acquired by Galaxy Digital, Paxos just raised $300 million. Like, there's a lot of activity in the custody space. And so there's a lot of interest, a lot of people seeking kind of the OCC regulatory approval and all those kinds of things. So, custody is a big thing, I guess, first of all. Second of all, as far as from our perspective, we did kind of look at the marketplace with everything, there's a lot of products out there, everything from pure key management all the way through to kind of a full custody solution that provides wallets and blockchain integration and provides kind of all the services for you. Ultimately, we decided to build our own custody solution for business reasons, as well as there's not a lot of custody solutions out there that support Hyperledger Fabric. And so in building out custody solution for us, it kind of provides a custody solution for people who are interested in Hyperledger Fabric. From our perspective, we did look at all the security certifications and considerations. Our solution is FIPS 140-2 level 3 certified. If you're not familiar with that, it's a NIST standard for defining the security requirements of a cryptographic module. Ours also, we are using servers that are specialized for security, data privacy, and resiliency. And our solution is EAL 5+ certified as well. And then the key management solution we are using is ISO 27001 and ISAE 3402. So really kind of taking the security qualifications very seriously and building out our custody solution.
Excellent. The NIST and the ISO standards, and there was a whole host of them there. We'll tease them out a little bit separately, but certainly I'm familiar with them, and complying with all those is certainly not easy, but they're very helpful standards. Is this type of market likely to create derivatives type trading opportunities, like derivatives off of the custody assets?
So I come from a derivatives background. So whenever
I was a softball
question, I'd say yes, because I love that market. And there's always opportunities, right? Anytime you're dealing in spot or physical delivery, people like to think about derivatives. And so the answer is yes. I think from the investment token perspective, there will be opportunities to create products based on those as well, but also especially in the industrial product, they are forward contracts, right? Because the materials haven't been mined or delivered yet. And so there's a lot that can be done in terms of structuring those products. But beyond derivatives, I think there's particularly interesting things in terms of financing activities. You mentioned earlier about the risk mitigation, and one of the aspects of blockchain, of course, is that both the fiat and the token, it's backing the token, have to exist in real time. There's not a promise of future settlement. It's an instantaneous atomic settlement. But as we know, most investors don't like to fully fund their trading activity. But because the assets exist, there's, I think, a real opportunity for financing these assets, because it's really easy. I'm going to say for Corey, I tell him everything is easy, and he nods his head and tells me it is. But there's ways, of course, right, within smart contracts to integrate financing activities so that the ownership is contingent on certain behaviors, right? And so even like a loan to value ratio could be maximized in this type of structure, not a derivative, right, but other kinds of financing activities, because of the way that the smart contracts are formed. That there is no, the recovery side of trying to repo an asset is really very easily solved with the smart contract and the technology that exists for blockchain. So I think there's a lot of extensions that I love my roadmap of things to come, because there's so many things to be done once you create a marketplace. And I think it's one thing that, Eric, by the time you and I got to know each other, when I was at ISE, that market had evolved. In the early days, the focus was really, how do you take a manual, paper-based, manual human and trading crowd, buying and selling market, and turn electronic. And if you fast forward in 15 years, there were knock-on effects in terms of market structure, price discovery, auction mechanisms, new indexing opportunities that existed as a result. And I expect that to help develop in our marketplace as well. If we're successful in creating the instruments, there will be new and interesting things that can evolve as a result. I think market data is one that's particularly interesting. If there can be a valuable real-time feed for price discovery of these materials, it's something that doesn't exist in the world today, and that I think would be particularly valuable both on the commercial side as well as on the investment management side.
Excellent. And so do you foresee like a wrapped palladium being deposited into Compound for cryptocurrencies?
It's possible, for sure.
It's possible, right? Anything's possible, but that could happen. Wrapped palladium. You heard it first. Yeah, that was my idea. And they're thinking, they're nodding their head, just be polite. Just be polite to me. That's all. That's all I'm saying. So we talked a little bit about security. Maybe talk a little bit about the experience of both integrating Hyperledger and some of the security, how you manage security in light of the Hyperledger integration.
Sure. I mean, I guess, first of all, as far as integrating with Hyperledger Fabric, most of my background is honestly on the Ethereum side of things. So some of this has been a bit of a learning curve for me in doing that. But honestly, it's been pretty straightforward. There's a lot of functionality and flexibility in kind of how we structure our tokens, how we structure the blockchain, kind of what privacy settings we want to establish as well. Each channel has its own ledger, its own policies, its own workflows, validators and smart contracts. It's an ideal solution for us from that perspective. The Hyperledger Fabric does have separate transaction processing, which gives us improved performance. It's basically broken up into 3 phases. They have a distributed logic processing. They have transaction ordering and formation of blocks, and transaction validation and commitment. So in doing that, we can separate and build the platform in a scalable way as well. And then the last thing I would say about kind of the Hyperledger Fabric piece is it doesn't rely on proof of work. So because of this, we can really get kind of higher performance, but also it's better for the environment. We're not doing a lot of proof of work processing or mining in order to do it. It's really based on kind of a validator model.
Right. Which is, would that be more like proof of stake, or? It's
closer to proof of stake. Yeah, the validators are the ones that decide that something is valid through a proof of stake model. Absolutely.
Excellent. Do they use what kind of validation methodology do they do quote unquote optimistic rollups or
there is a roll-up process that takes place. It's split up into what they call orderers and peers. So the orderers are the ones that handle kind of the validation of the transactions, and then those are moved into the peers, and that's where the blockchain code is stored. Is how it's processed. So.
Okay. Excellent. So we touched a little bit on the third-party audit and the importance of that. And I think you use a third party, use an accounting firm to validate it. So how does that work? Do they actually go to the Brinks vault and they open the vault and they go inside and they start testing it out, or how does the process work?
Yeah, so there's a combination of the third-party auditor, which for Palladium is Witham, which is a pretty well-known international auditing firm, working with Brinks. So, in the meat of how the whole tokenization process works, as we go through the process with what we call a tokenizer, we especially don't use the term issuer because we're not dealing with security, so we use the term tokenizer. The tokenizer onboards with us, but they also give us an entire inventory of the metal that they're going to be tokenizing. So the first step is for the metal to be moved to our vault, which will be a tier 1 vault. That the vault itself actually validates the inventory it's expected to receive versus what it's actually receiving. And then from there, as we're moving through the tokenization process, the auditor does work with the vault to assure that the bars that are inventory match exactly the bars in the blockchain record. One of the things for the platform itself is that at any given time, a customer can actually see what specific bar they own. So there'll be a portal on the website. So if you log in and your token is ownership of bar 123789, that you can actually see that, and that the auditor itself has verified that bar exists, and the vault itself is verifying that bar exists in inventory. So there's really not only the customer being able to log in and see that, which of course is just a record on the web page, but the auditor and the vault themselves working in tandem to assure that bar is within the Atomyze cage at that vault.
So I think I saw a visual of how the user can actually see what they own, and it was super cool. Like I think I want to get some just so I can kind of like look at it and point to it and say, hey, that's mine. But you can actually see like in a stack, and it's like it even like highlights it, so you can be like, come here, honey. It's not the one on the end. No, it's the one that's lit up in blue. That's mine. I think my kids would think that's super cool.
And what's really important is you can actually go on the front end and hit redeem and actually get it. So that's really important to the construct of the product, especially as a spot commodity, that you can actually access your metal. So we're not really expecting people to necessarily source material for industrial use, but it's possible, right? If you wanted a bar of palladium and you wanted it out of the vault, you can acquire it and redeem it pretty easily on the platform.
Excellent. Well, if I do it, I think it's cooler to show it in the picture. I'd be too nervous if I had to laying around my house. I'd have to go to I'd have to go back and find a way to redeem it if I wanted to monetize it. So I think when I get mine, I'll just leave it with you guys. It's just
and don't tell me where you live if you do have it shipped to your house.
Yeah, make sure it's not delivered outside my door, right? So going forward, I know we talked about other asset classes. We talked about you noted IP could be done this way. You noted certainly that's compelling. You noted other physicals.
Yeah. So for us, as we're thinking about our roadmap, there's a couple of things. As you mentioned, market size, right? So there's a lot of things you could tokenize. There's not much of a market for them, or if the market couldn't be developed to be of a certain size, probably less interesting from a lower perspective. But we're looking at commodities that are underserved in the world today, are harder to access, where we think we can make a pretty large impact on them, that are efficient in their trading. And so those are sort of the market dynamics that we think we'd have the most power early on. From a product perspective, we touched on some of the things that make it important. It has to be able to be sequestered, warehouse, vaulted, identified. So if we're thinking about land, if there's some metals like nickel doesn't exist in vaults, it exists in a warehouse, but it can be sequestered, it can be identified, can be audited. Because when we're talking about products of this magnitude, again, people want the assurance that it exists. If it's a forest and it's being harvested for lumber, You also want to make sure there's probably trees on the land, and how old are the age of the trees and what quality trees are on the property, right? There's a lot of things that go into not only the tokenization aspect, but all the business aspects and the regulatory aspects in terms of structuring the product. So, is the product a security? Why or why not? How do you get comfortable in structuring something that it can be redeemed and deliverable, that it's not being centrally managed, right? Or if it is a security, what might we need to do to offer that in a regulated environment? What are the licenses we need to pursue in the future to move in that direction? So all these things are on our roadmap, but we do think there's a pretty big opportunity in assets that are underserved. Some that are regulated today, and we know that most of the metals are, and some that aren't. We've seen a lot of activity in the art space in terms of Nifties and assets that have been going up for auction, and there's particular interest there as well. So I think the space is pretty broad, but making sure that we can do everything in what we perceive ourselves as being a highly regulated, white glove, super secure, high value platform that helps tokenizers bring their assets, tokenize them, create the types of products the market wants, and then also building the market and the ecosystem for people that want to acquire these assets in a very secure, robust, and efficient style of trading of those assets as well. So bringing those two together in-house, I think are really important in terms of the success of the platform.
And you mentioned lumber, right? Would that also cover like forestry from an ESG type of investment?
Exactly. So that's one of the really interesting things about the product is that you can actually embed within the smart contract, not just the material that you're buying, but where it came from, who sourced it, who harvested, where did it exist along the way, where was it stored? And so there's a lot that can be done, I think, especially some of the soft commodities in terms of tracking, tracing, timing for all of those. So it's a very big space to cover, but I love to look at the roadmap and think of all the things that we're going to be in within a short period of time.
Well, that's certainly very exciting, and certainly going to be paying attention to Atomyze and how it evolves. Because one thing's for sure is you certainly don't have a lot of the securities laws issues when you're dealing with the commodities. That's pretty straightforward, which is also nice. So, thank you so much for coming on the show. Before I let you go, anything that I didn't ask that perhaps I should have asked?
Well, of course. How do you get in touch with us?
That's next. That's okay. At the end. That much I had covered. I was good on that one. Before I get to how to get in touch, anything that I failed to ask that I should have?
Corey, anything on your mind?
I don't think so. No. Did I answer you had asked about security before. Did I answer that, or do you want me to circle back on that at all?
Sure. Because I know you went through some standards but maybe a little bit of additional color on security.
Absolutely. So security is broken down into a few things. One is kind of the policies that we adhere to, and two is kind of the process that we follow. So from a policy perspective, we're starting out with NIST 800-171, which is kind of the recommended security requirements for controlled and classified information. And so that's what we're going to follow. It gives you a set of access control, configuration management, incident response, physical protection, risk assessments, and all those kinds of things. As I think the CMMC came out early last year, which is a cybersecurity maturity model certification framework from the DoD. Once we get kind of the NIST 171 in place, we're going to start working on the CMMC as well. That really has kind of 5 levels of certification, and so we're going to work our way through those as well, because security and the policies around that are extremely important to us.
You're targeting CMC 5.
No, not right away.
I would hope not. That's crazy.
No.
I don't think you need to be that high, but
no.
3 wouldn't be a bad option. 1 would be a bit of a layup, but that's where you start, right?
Yeah. Well, yeah, you got to do 1 before you do 2, before you do 3.
Exactly.
You got to work your way up.
That's right.
Like I said, it's important what we're building. The other thing I was going to touch briefly on security side is just kind of the processes we follow, kind of a DevSecOps model, which is, really shifting security left. I don't know if you've heard that, but basically moving security testing and things as early in the process as possible. So while you're writing code, you want to do checks. While you're doing, before you check in code, there's an additional set of checks of things like high entropy strings and making sure passwords and things aren't being checked into the source code, and kind of you're working your way through the process. So, I do want to kind of highlight that security is really important to us and part of everything we do. And DevSecOps really kind of forces that integration right into the security of our entire build and deployment pipeline. So I just wanted to touch on that briefly.
Excellent. Excellent. So now I'll ask, so people want to get in touch with you, where can they go?
Well, they can find us at Atomyze, Atomyze. We're, got to have a cool, clever name because we're a FinTech startup.
There you go.
Atomyze.us.
Okay. And where can they find you personally? I know you're on Twitter. Want to give out a handle?
No. Yeah, I don't actually tweet that much. You can find me on LinkedIn, or
Okay.
Ping me there is probably the best way to get in touch with me.
Okay. How about you, Corey?
No, I think going through Atomyze is probably best. I'm also on LinkedIn, which is fine. Anybody can reach out and happy to have a conversation. So.
Excellent. So thanks so much for coming on the Encrypted Economy, and we'll certainly be following your progress. Thank you so much.
Thank you, Eric.
Thanks, Eric.